All right, good morning, everyone, and welcome to today's webinar on tax investigations and inquiries. For those of you that don't know me, I'm Vicky Elliott, Director of Private Client Taxes at PD Tax Consultants. So first of all, a little bit about us and what we do. So we provide tax consultancy services, so that's tax advice, tax returns, and the topic of today's webinar, tax investigations and voluntary disclosures. A little bit of housekeeping. So we're aiming to finish at 10 a.m. today. Your mics will be disabled throughout, so please do submit questions through the Q&A box and we'll go through those at the end. If we run out of time to answer your question, then I will be in touch afterwards. And then finally, just please note this webinar is for general information purposes only. It's not intended to be individual advice, so please do get advice before action on anything. So first of all, we'll just have a quick recap about types of tax investigations. So probably the most common types that you'll encounter are general inquiries or compliance checks. So these can either be a full check covering an entire return or an aspect check. So if there's just one particular element of a return that Hmrc have questions about. And then you have the more kind of involved serious inquiries known as Code of Practice 8 or Code of Practice 9. Code of Practice 8 is looking at where there's kind of what Hmrc calls serious tax avoidance, so perhaps involving employee benefit trusts. And Code of Practice 9 is where there's a suspicion of fraud. And then more recently, what we've been seeing is there's what they call nudge letters. So this is Hmrc writing to taxpayers and saying, we think you have this type of income or asset. Are you sure everything's up to date? And that's increasingly common. So it's not really an investigation as such, but that's probably the most common theme we're seeing at the minute is Hmrc launching these nudge letters. So in terms of the nudge letters, really what they're doing is they're encouraging taxpayers to disclose voluntarily. Now, if Hmrc differ to a response or don't get the answer they expect or don't get any response at all, then of course they may go on to open their own inquiry. But they're hoping that most taxpayers will disclose voluntarily, and that gives them a really cost-effective way of bringing in more tax revenue. So the recipients of these letters are generally being targeted from data sources such as the Common Reporting Standard, the Land Registry, etc., to identify recipients. And earlier versions weren't particularly well targeted. I think we were seeing lots of clients getting them who'd had nothing to disclose, or perhaps everything had already been included on a tax return. The more recent versions seem to be going through a better risk assessing before the letters go out, so they are more likely to be cases where people have tax that's not been paid. Generally, these letters are kind of asking taxpayers to complete a certificate of tax position to say whether or not there's any tax payable, or if not, to certify that there isn't. Now, generally, we'll come on to this in a bit more detail, but generally it's recommended not to complete those certificates. So that's just something to bear in mind. Now, CIOT have published some sample letters so that if anyone hasn't come across any of these yet, you can have a look and see what they tend to look like. So if any of your clients receive them, you know what to expect. So there's a link here and the slides will be coming out after the webinar, so you'll get those. And the other thing that's really worth noting is that because clients are having these letters, any disclosures they do make are likely to be considered prompted rather than unprompted when it comes to penalties, because obviously they're making that disclosure based on the fact they've had a letter from Hmrc. So what kind of topics are the nudge letters covering? So I've got here a list of topics. The main one really we're seeing over the last couple of months has been offshore income and assets. We have prior to that seen a few on capital gains tax and residential property, but I believe the rest of these topics are ones that are going to be becoming more prevalent over the next few months. So things like rental income, investment income, non-filing of ATED returns for companies that own residential properties. They're also going to be looking at cases where they think there's deferred consideration on share sales, benefit in kind, differences in pay, and also persons of significant control. So how to respond to nudge letters. So there's really first thing to do for anybody who receives it is to review the situation with the client. If they have been doing tax returns already, have they missed anything? And if they haven't, why not? Is there anything that needs reporting? What that review will entail will obviously vary client to client depending on what their situation is, and what may or may not have been disclosed to Hmrc. Now, if there's nothing to correct, if you're happy everything's fine, then the next question is, how do you respond to Hmrc? And as I mentioned before, generally it's not recommended to complete the certificate. The reason for that is it is what Hmrc call a prosecutable document, which means that if there's any inaccuracy in it, if something later comes to light, then that could obviously disadvantage your client. So generally not a good idea to complete the certificate. At the same time, you don't want to ignore the Hmrc letter altogether. So what we would tend to do is write a letter to Hmrc to explain why we think there's nothing to correct, in fairly simple terms. So that's generally how we would deal with that situation. If there is something to correct, again, we wouldn't tend to complete the certificate. We'd write to Hmrc to explain what we're going to do. And in terms of what we're going to do, that's really going to depend on what are the relevant time limits for that particular case. So how many years can Hmrc go back and expect a disclosure for? And then depending on what the answer to that is, we have to decide how we're going to make a disclosure. So it might be, if it's quite a recent tax liability, we might be in time just to register for a tax return for an earlier year and do that tax return. Or it might be that we're looking at doing a disclosure under something like the Worldwide Disclosure Facility, the Digital Disclosure Service, or the Let Property campaign. So before I go on to some examples, I thought we would do a quick poll. So the question is, what types of Hmrc inquiries are you seeing? So I'm just going to launch the polling now, so you should have that up on your screens. So I'll just give everyone a few seconds to get their answers in. If anybody is receiving kind of interesting Hmrc inquiries, please do get in touch with details of these, because we'd be really interested to see what kind of situations you're coming across. And obviously, if we can help with any of them, then we'd be happy to. Right, okay, I think everybody's voted, so I'll give you 2 more seconds and then we'll end the polling. There we go. Right, so here's the results. So it looks like the nudge letters around offshore property are quite definitely the most common, followed by VAT inquiries, and more nudge letters about property and self-compliance compliance checks. So that's really quite interesting. There's also quite a lot of other, so it'd be anybody in that category, be really interested to see what those are. Okay. So here's some examples of recent situations we've had. So example 1 is a client who received a nudge letter in relation to offshore investment income. So the letter just said they had offshore income or assets, and the client got in touch and said actually they have an overseas investment account. They've had it since 2013. It was jointly owned with 2 other relatives. And when we looked at the statements, there was interest, dividends, and capital gains to declare. So the resolution for that, because it was all the way back to 2013, was a mixture of tax returns and the Worldwide Disclosure Facility. We also wrote to Hmrc to tell them that. And one of the interesting things here was because it's offshore and because some of the liabilities were for 2015-16 and earlier, that meant that the penalties were a lot higher than you might expect, because the failure to correct penalties kicked in, which give a minimum 100% penalties for offshore liabilities for these earlier years. And then finally, it wasn't something we had to answer because we were only engaged for the one client, not the relatives. But he had received the letter, but his relatives hadn't, who were joint owners of the account. So if they do a disclosure, they'll obviously have a question to answer of whether they're prompted or unprompted, because they were prompted, but not by correspondence to them, but to correspondence to a family member. So it's something they would have to answer for themselves. The second example we've got, a client again received a nudge letter about offshore income or assets, and turned out that he had acquired a rental property with his partner, which was being owned via what is known in the US as an LLC. Now, an LLC in the US is taxed as though it's a partnership, so it's transparent for tax purposes. And the members are therefore taxed on the underlying profits. And for US tax purposes, the tax return showed an adjustment for depreciation. And once that was taken into account, there was a rental loss. And so there was no US taxes payable. Now, Hmrc view LLCs as companies, not partnerships. Now, that position is worth a little bit of debate because there has been some case law on that over recent years, but that's Hmrc's view, is in most cases LLCs are going to be companies, and on that basis you'd be taxed on the distributions, not the underlying profits. Now in this case, because there was rental profits in cash terms, it was just in tax terms with the depreciation that there was no profits, they had declared distributions, and so there was some overseas dividends effectively on which tax should have been paid. So again, the resolution for that was a mixture of a disclosure and tax returns and a letter to Hmrc to explain what we were doing rather than completing the certificate. And third example, so again, quite a theme here, offshore income and assets was the letter that was received. This time it was in relation to an overseas rental property. So the clients were from Ireland, Irish citizens, but they'd moved to the UK many years ago. The former properties in Ireland, husband and wife each had one, they were now let. They've been paying tax in Ireland, and so they simply hadn't realised they also needed to pay tax in the UK. And because of the differing tax rates and personal allowances, there was still some tax to pay even once the double tax relief was taken into account. So again, resolution here, because it was over many years, was a mixture of the worldwide disclosure facility and tax returns. And another example, so again, this was a letter about offshore income and assets, but a different asset again. This time it was an offshore bond. And this wasn't one of our own clients. This was an accountant who used our tax sounding board service. So I've only got some brief details about it because we just had a call on it. But essentially, an offshore bond had been encashed and they hadn't realised there was any tax to pay, so nothing had been declared to Hmrc. So the key thing here is with an offshore bond, you should get a chargeable event gain certificate. It tells you how much the taxable gain is, but that gain is subject to income tax, not capital gains tax. So depending on which tax year it was for, they'd either need to submit a disclosure or there might be time to do a return. Now, in terms of other current areas of Hmrc focus, it's worth noting that due to COVID-19, they did pause a lot of inquiries. That has now, work is now resumed. So those cases should now be carrying on. Hmrc have issued a briefing about them looking into misuse of various coronavirus support measures. So hopefully that won't affect any of our clients, but is worth bearing in mind. We've also seen that because of requirement to correct time limits, there was a deadline for Hmrc to make discovery assessments in relation to some years of 5th of April 2021. So as a result of that, we saw quite a few discovery assessments being raised in March. I think generally the appeal dates for those are probably either passed or about to pass. So I think if any of those, they're probably already on your radar. And then finally, one thing that's worth noting, it's not really a private client matter, but more of a business tax matter, but something that we have noticed is Hmrc are taking a generally stricter view on clearance requests for corporate restructuring transactions. So they're definitely asking for more information and not clearing circumstances that they might have done previously. So not directly related to tax investigations, but it is, you know, a kind of current area of Hmrc focus, should we say. Right, so I think we're just coming up to questions and answer time. But before we do that, just worth mentioning our next webinars that we've got coming up. So 14th of May, we've got a webinar on capital allowances, and 11th of June, we'll be talking about inheritance tax planning. We will send you details after the webinar. Okay, so I'm just going to bring on my colleague, Laura, who's going to assist with the Q&A section. And please do excuse my voice. I think it's just going a little funny from talking for so long.
Thanks, Vicky. So we've got a few questions. The first one was regarding the slides. So are they going to be available after the webinar, and where can people find them?
Yeah, so they will be provided after the event, and the webinar will also be going up onto YouTube. So if anyone wants to rewatch anything, then it will be there.
Great, and we'll be sending an email out after this with a link to our YouTube as well. So another question is, what are your clients' experiences with setting up time to pay arrangements with Hmrc? And have you found Hmrc to be flexible?
Yeah, it's a really good question. Generally, Hmrc are reasonably okay with time to pay arrangements. I think reasonably flexible. And increasingly, because of COVID, they're having to be a bit more relaxed. They know that people's finances are a bit trickier at the minute. But as ever, every case is looked at individually with time to pay arrangements. So you have to make sure that you're really looking at documenting what income there is, what expenses there are day to day, what money is needed, and then from there you can put forward a suggestion to Hmrc.
Great. And when a client submits a disclosure, how often do you find Hmrc comes back to request more information? And if they do, what kind of information do they ask for?
Yeah, so most of the time when we submit a disclosure, we don't tend to get too many questions about them, I would say. We have had one recently where they're asking a lot of further questions, and that was a rental disclosure, and they were really digging into a lot of detail. They wanted evidence of the mortgage costs, evidence of all the expenses, wanted copies of receipts. I think on that particular one, they obviously had quite a lot of uncertainty about the information being put forward by the client. But generally, we don't have too many information requests.
Great. And the final question was, how many years can Hmrc go back when looking at a disclosure?
So this will vary client to client. So it's up to 20 years, depending on the circumstances. So in the case of fraud or deliberate tax avoidance, generally 20 years. For any other errors, or if there's an inaccuracy in a return, then the limits might be lower. There might be 4 or 6 years. But if it relates to offshore avoidance, then it can be up to 12 years. So it really depends on the behaviour of the client, the type of tax liability that's understated, and whether or not they've done returns.
Great, thank you. That's all of the questions for now.
Right, okay, thank you. I think we're actually a little bit ahead of time, which given my voice seems to be going very croaky, I think is probably a good thing. But please do send through if you have any questions about any tax investigations or inquiries that you're dealing with that you want some help with, please do send them through and we'll send you the slides shortly. So thank you for joining us today.